Can you invest in Axis Quant Fund NFO? So this is what you're going to see today. So hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Stock Market Plan. You can check it out on Amazon. Link is in the description. So another NFO from Axis. So last couple of weeks ago, we had Axis Global Innovation Fund. So which is totally different, which invests in the global market. And today's fund, this fund is going to be of investing only in rule-based approach, which is something new and which is not something new. Actually, a couple of funds are there, which I will reveal towards after a couple of minutes, because let me explain what this fund is all about. Can you invest in this fund? So this is what we are going to see today. So they invest based on a approach called QGARP, which means quality stocks with growth prospects at reasonable price. Is it good? Quality stocks at reasonable price and with good growth prospect as well. So over a period of time, you will see good returns, because this is the same logic you should apply in stock market to find quality stocks one by one. And this fund is going to do all by itself. Yes, there is no interference, meaning nobody is going to say this stock is good, this stock is not good, because once I have a strong what to say growth towards strong thing towards FMCG sector. I like FMCG, I like to invest in that. And some people will like towards pharma. So instead of going behind like these sectors, instead, how about this fund, this in FMCG, this stock is good because of all these factors. In pharma, this stock is good because of all these factors. In banking, this is good because of all these factors, irrespective of whether the management is good, irrespective of what is that. Because what we are going to see is certain rules like return on equity, return on capital employed, price earning ratio, earnings yield, dividend yield, volatility, all these things are considered inside that QGARP. So which means system is going to throw some stocks like these are the good quality stocks based on these factors, and then investment is going to get allocated based on that. Nothing doing by the people who are, because if you are involving people, we will always have a bias means as I said, I like FMCG. Some people will like only the slow growth stocks because they doesn't want to take risk. But here everything is automated, everything is systemized, it will work. And the advantages, they have done the back testing for the last 20 years, or I think more than 15 years. And what they found is over a period of 3 years rolling period, say from 2021 to 2024, this fund has not given negative returns. So every 3 years, they have done rolling period of 3 years for the last 17 years tested, and this fund has not given any negative returns. This is the most thing which runs in everyone's mind, is right. So what will happen if this fund is giving negative returns? So they are done back testing for the last 17 years, which is a very very long period. During this period, for every 3 years, this fund has not given any negative. So it means even if the stock market is correcting a lot, after every 3 years, if you're waiting, automatically your fund will not be negative. So it means you will be in a positive territory. So something will be good, right? And how the fund composition is going to be: 80% is going to be in equity, remaining in the range of equity and equity related instruments, and remaining 20%, 0 to 20% will be in the cash, and because they need to deploy, and they may hold up to 20% in cash, they are saying in advance. And another 0 to 10%, because 0 to 20, 0 to 10, so it will be in that range. So 10% will be real estate investment trust. So that is slowly catching up in India. This fund is investing 10% in that kind of real estate related, so we'll be getting us some fixed returns from that as well. So the ultimate advantage of this fund is unbiased approach with diversification, because they are going to choose funds among the top 30-50 stocks, and they are done back testing, that results are there. So what this signifies is that, let me show you that. So now I'm just going to show you the model data which has been in the market for, I mean, which Axis Fund has tested, and I'm just going to share that. Okay, hope you're able to see this. So just look at this model performance of an historic record. The BSE 200 is the top 200 stocks. This is the benchmark we are going to test. And just look at the quant model, how much returns they had given. And just look at, just in the last 7 years, they had done the back testing. And most of the time they had managed to beat the returns. and the model has managed to beat the benchmark by 10 times in the last 14 years with an average outperformance of 7.6%. So this is the kind of record. Just look at from 2020 to 2007, 14 years they had back tested, and even when the market is falling, this fund has done extremely somewhat better than the fall of BSC 200. And just look at the 2007 period, they are done extremely well. And when the market is going up, and even when the market has fallen in the 2011 period, it is, whereas BSC 200 is minus 26, this is just minus 16. So a couple of times this fund has given less, but most of the time, I think except barring 4 times, most of the year, financial year, this fund has done extremely good. And this is a 3-year rolling data from 2007 to 10. So they are taken from 2009, it is showing up. Just look at every time it has beaten, and in the past 17 years, the model has outperformed the benchmark on 99.2 instances, which means they are done extremely good. So this is the asset allocation part. And so units issued by REIT, they are investing in real estate and related things. Okay, and if redeemed, the exit load is 10%, and after 12 months it is nil. So this is the fund you can look to invest. The minimum application amount is 5,000 rupees, and multiples of 1 rupee you can start investing. And the maximum fees, this is the expense ratio, 2.5%. So if you are someone who is looking at expense ratio, you can look at investing in direct fund, or else go for regular fund. So option thing is yours. Okay, the option is with you. And this is the model I said: quality, valuation, and growth. So the parameters for each of the thing. For quality, they are checking ROE and ROC, which is a really important thing to do. And equity, debt to equity ratio, if it is good, they are not going to invest in companies which is having more debt. And volatility should be lesser. And just look at the growth prospect, earnings improvement every quarter on quarter, it should increase, every year it should increase, and change in profit margins over a period of time, every quarter as well as every year. And analyst forecast, so what is a forecast? Is it beating all these things? And when it comes to valuation, they are checking the price earning, price to book value, dividend yield, price to sales, because everything is dependent upon. For retail sector, you need to check at price to sales. For banking, you need to check price to book. For IT and other things, you need to check price earning ratio. So they are checking everything based on the sector wise, so it looks good. So this is something like this is a thing. So this is something you can look to invest. And for long term also, this is something good, because the parameters are being followed, what are the things they are following. So if you are looking to invest in NFO, yes, you can invest lump sum also, but my suggestion will be to go for SIP, looking at the current market condition. And you can invest for long term as well. So 3 to 5 years, minimum 3 years, because rolling returns for 3 years is going to be positive. So considering that point, so minimum 3 years, maximum based on your financial goals, you can look at investing. Thank you so much.